generally speaking, a lot of their results were weaker than expected.
While some companies might be treading water this earnings season, there are several leaders that are soaring this quarter.
Well, these companies all beat on the top and bottom line. They also all provided solid guidance.
From some Mag 7 standouts to other rising stars.
The stock is up about 20 to 25% since then and still heading higher.
MarketBeat's Thomas Hughes dives into 5 companies that crushed this earnings season.
The analyst revision trend is among the most robust of any company on this list.
Yeah, this was one of the biggest winners for sure out of earnings season.
This company is firing on all cylinders.
Will that momentum keep these companies rising higher in 2025? Let's dive in. Thomas, so great to have you back on the channel. Now that earnings season is just about wrapped up, we all know NVIDIA still has a few weeks before it reports, and of course, we will cover that. If you're a subscriber, you know we always follow NVIDIA earnings reports. If you're not a subscriber yet, hit that subscribe button to make sure you never miss one of our daily stock videos. Thomas, you're great about giving us that reaction same day as NVIDIA reports. But today it's not about NVIDIA. Today is about all of the other companies in earnings season. You've put together a list of 5 companies that crushed earnings this year. We're going to get to that list in a minute, but overall, what's kind of your reaction to what came out from earnings season this quarter?
Well, the results were really mixed. And generally speaking, a lot of the results were weaker than expected, except for in a few areas. And one area that was really strong was technology and AI. And within that, it was the leading companies. I think that the list I have today is pretty significant because it includes so many Magnificent Seven stocks and AMD, which we can include with that group right now simply because of data centers and AI. I think that it's a pretty positive sign for the market, but it just depends on how things kind of play out over the next couple of weeks and months with the macroeconomic situation, tariffs and whatnot.
Yeah, and before we get into the list too, let's talk about what you were looking at. What qualifies as crushing earnings season?
Well, these companies all beat on the top and bottom line. They also all provided solid guidance. So they exceeded expectations and increased expectations for the future. It's really a best case scenario given the conditions right now with all the fears and the concerns about tariffs and the future impact on earnings and revenue.
Well, let's get right in. What is the first company you have for us today that totally crushed earnings this quarter?
Oh, that's Microsoft. Microsoft beat on the top and bottom line and raised their guidance. They reported strength in all segments. Asia was particularly strong. That's important. That's where their AI lives. Asia and AI led the growth. It was a record-setting quarter. They had really impressive cash flow. The capital returns were safe. To me, all of that just plays into a steadily uptrending stock price. There may be headwinds and hurdles and some price pullbacks between then and now, but new all-time highs are coming.
Well, let's pull up the chart for Microsoft. I know the day after earnings, this company saw an almost 10% swing to the positive side. What has its stock been doing since then?
Right. Well, you can see that Microsoft stock popped pretty significantly the day of the report. I think that was about a 10 or 11% gain. And since then, it has drifted higher. Right now, we're showing a little bit of resistance at these high levels. But the move looks pretty strong. We got a pretty strong bounce off this long-term moving average and this support level. I would expect to see this stock be retesting its all-time highs pretty soon. And the analysts are leading the market that direction. Right now, they're raising their price targets and leading to new all-time highs.
Yeah, how high of a price target are analysts now expecting for Microsoft?
Right. So, the analyst trend since the report was released was pretty positive. We have numerous boosted price targets, several reiterated ratings and price targets, all leading to the high-end range. The consensus is looking for about a 15% gain, but the high-end range, we're looking for 30 to 35% upside. Some of those recent revisions come from Piper Sandler, Morgan Stanley, Wells Fargo, Guggenheim, all pretty large, well-respected firms.
What about Microsoft's earnings report has so many analysts raising their guidance right now?
Just the whole thing. I mean, the whole thing, they're showing strength in the core business. They're showing strength in the AI business. They're showing strength in consumer, and they're showing strength in businesses. They're raising their guidance. So there's really just nothing not to like about the report right now.
Yeah, well, I think the next company on your list has a kind of a similar story as Microsoft. Let's get into number 2.
Yeah, we're talking about Meta Platforms. They've got quite a history for crushing earnings and giving guidance. I think it's been since 2022. They started with the year of efficiency. They leaned into AI. So they've been improving margins, but also boosting performance at the same time and really, really energizing growth and the margins and the cash flow. This past quarter, the cash flow was 50% of revenue. Free cash flow was 25% of revenue. The balance sheet is very strong. All of this cash flow and this growth is allowing the company to reinvest in its business and its growth. And so far, what we've seen is every dollar invested in AI produces more than a dollar in return. So right now, Meta is also firing on all cylinders. It's really like a must-own company in 2025. As far as the analysts are concerned, they've been lifting their price targets. They're also leading this market to new all-time highs. Part of the investment thesis also with Microsoft is the capital return. Both of these companies, well, Microsoft is more of a longer-term dividend payer. They've been paying dividends for quite some time. Meta has emerged as a new dividend growth company. So they've paid a dividend. I think they've raised it one time. We're expecting them to continue increasing their dividend. They're repurchasing shares. This past quarter, the share count fell by over 1%. That provides a lot of leverage for investors. With the business outlook, with the cash flow outlook, with the capital return outlook, we expect all of these things to continue providing leverage for investors and driving that share price to new highs.
Let's talk about specifics on the stock price and just how much higher analysts think that this stock can go since it just continues to grow.
Right. So like with Microsoft, the analysts are raising their price targets. The consensus estimate is looking for about a 15% upside right now. We're talking 15% upside in early May, but the revision trend is positive. The high end range adds another $225 to the consensus target. So that's about a 35 or 45% addition to the 15% upside. So we're looking at quite a robust forecast for this stock.
And Meta also saw a pretty big boost in their stock price right after that earnings report, too.
Right. This stock is confirming support at critical levels, just like Microsoft, confirming a long-term uptrend, and it's been moving higher since. I would expect to see it continue to gain momentum given the trend in analyst sentiment and the outlook for future earnings.
Well, the first two big Mag 7 reports that a lot of investors were waiting to see. This next company also a really big win.
Right. Talking about Netflix. I mean, Netflix is a powerhouse. You can't say enough good things about Netflix. Growing ad dollars, growing subscriber dollars, deepening penetration, introducing new revenue models, revenue streams to their business, and expanding margins. Over the last year or so, this company really turned a big corner by reaching investment grade quality with its debt. That means it costs it less to borrow. It frees up cash flow. It is a big sign of confidence for the market. Also, a capital return machine. This cash flow is growing. We've got not a dividend yet, but we have repurchases. Share count is down 1% in the last quarter. So that's a nice little bit of leverage for investors.
I want to talk about the business a little bit too. And not quite a year ago, we were talking about some of the changes Netflix was making
Right.
and what that was going to mean for the company. It seems that those changes are paying off pretty well.
Oh, definitely, definitely. They're increasing. Well, they've stopped reporting subscriber numbers, but up until this past quarter, they've been growing subscriber count. In the last report, they did highlight that subscriber dollars was part of the growth, so we can assume that subscriber count is growing. But also within that, they're introducing the ad tiers and higher pricing for certain regions, and so all of those things are helping to drive the growth. But the biggest takeaway is that the crackdown on password sharing and increasing prices and the ads are not scaring people away. They are still coming to Netflix. They're flocking to Netflix. And that just provides a lot of leverage for their business and provides a pretty clear path forward for investors who are concerned about growth and revenue and earnings quality.
Netflix isn't quite a Mag 7 stock. It's not quite that big yet, but it has seen a lot of growth, especially in the stock price right after this earnings report.
Right. Like with these other stocks, the earnings report catalyzed a strong buy signal. They confirmed an uptrend, and the stock is up about 20 to 25% since then and still heading higher. The analyst revision trend is among the most robust of any company on this list, and they're forecasting a good 50 to 60% upside near the consensus, not just at the high end range, but like at the consensus level. So we're looking for a pretty solid upside for this stock.
Yeah, this was one of the biggest winners for sure out of earnings season of just really strong growth and expected even more strong growth in the future. This is going to be a stock to watch for the rest of this year, I think.
Well, right, and it's surprising for the market too because of the expectations for consumer pullbacks and macroeconomic headwinds, and they just didn't show any of that impact.
Very true. Well, we are going to switch back to AI for your fourth company on this list. But before we get to this really surprise breakout earnings report, check out this free report just for our YouTube viewers right now. You can scan the QR code or click the link that's in the description of this video and get this free report on the 10 best AI stocks in the market that could transform your portfolio. Again, that QR code or the link will both get you that free report to download now. Well, Thomas, let's get to your fourth pick right now, and this one is really interesting.
Yeah, that's advanced micro devices. What I said about that in the article was that this report was really reassuring to the market. There's been a lot of expectation for AMD to benefit from the data center push, the AI push, to kind of regain some share from NVIDIA. And the results over the last few quarters have been great, but not like spectacular, have not really fulfilled that hope. This current report wasn't exactly as spectacular as it could have been, but we're still seeing acceleration. We're seeing strength in the core business. We're seeing strength in the data center. We're seeing strength in both CPUs and GPUs, which is important for this company long term. And something else I want to point out, I think that for the long term, Advanced Micro Devices is a little bit better positioned than NVIDIA. I'm not saying that NVIDIA is not well positioned. This is nuances here, but AMD has got a more diversified business where its semiconductors are being used from the cloud to the edge to endpoints, and NVIDIA is mostly going to be in the cloud and data centers and then in game consoles.
AMD is one of those companies that we've been talking about for months now because it just has kept going down. The stock price couldn't quite find a bottom for a long time. What did this earnings report do to that constant tumble that AMD's been on for the last few months?
Well, I think what it did was reinvigorate the bull market, because what's happened is AMD's stock price experienced a huge bubble. If any stock in the market experienced an AI bubble, it was AMD, because we, me included, expected their results to follow and track in alignment with NVIDIA, and it just didn't happen. NVIDIA's first mover advantage is why it had its huge revenue growth. AMD is having to catch up. But since then, the stock price has retraced all of the gains from the bubble, returned to this level where it had not priced in any AI premium. Now we've got these results confirming that it's still a strong company, still viable, still growing, still able to gain or regain share in the data center. So now that rebound is back in play. The initial analyst response was a little bit tepid with some price target reductions. There have been a few reductions since the report was released, but more of the revisions are either reiterations or upward revisions, and there are a few upgrades. So I would say that the analyst sentiment has also bottomed, and that's a good thing for the market that will help lead it higher over time.
I feel like AMD is the stock right now that's maybe the hardest one for retail investors to navigate. Of this list of 5 that really crushed earnings, there's upward momentum in a lot of the other companies. AMD might still have that, but there's still some questions with investors who've lost so much with this company. A lot of people got out and didn't really get back in at that low to take advantage of this post-earnings boost. Is there potential for more volatility in the future after all the volatility we've seen with this company?
Oh, I would say for sure. As the stock price advances, as the market advances, we're going to hit and trigger these technical levels that are going to create profit taking, and in some cases, it's going to cause investors who are losing money to cut their losses. So right now, investors who are losing 20, 30% might wait for their losses to shrink to 15 or 10% and then cut their losses there. So looking forward, we should expect to see the stock have some volatility. Macroeconomic headwinds aside and tariff impact aside, I would think that it would be minimal and that the trend should remain upward over the next few quarters.
Last thing for AMD before we get to the final stock on your list is I just want to have you give that long-term case for AMD. Is there a case to be made for holding onto this investment long-term? Anything in the earnings report show you really strong future long-term growth potential?
Oh, absolutely. This company is firing on all cylinders. We've got normalization in the legacy markets, and we have growth in the data center markets. It's taking share in CPUs. It's hopefully going to be regaining share in GPUs, which many analysts are forecasting. That's due in part to its advancing technology, but also the maturation of its software stack. Its ability to help analysts, or not analysts, but developers and companies actually unlock the power of its technology. Some recent acquisitions and a recent partnership with Wrapped AI also will help do that. So this company is really working hard to bring its technology to the market. It's not just waiting for the market to come to it, asking for GPUs and AI technology. It's developing a go-to market strategy to take these things to its clients and say, hey, here's our technology. This is what you can do with it, and this is how you do it.
Very good. Well, let's move on to the final company on the list of 5 that have really totally crushed this earnings season.
Right, that was Roblox. Roblox is not really a capital return machine now, but the results in this past quarter show that it is tracking in that direction. So we have top and bottom line growth, but more importantly, cash flow grew by 86% and free cash flow grew by 123%. So that's really fantastic news for the business, for the balance sheet, for profitability, for shareholder value.
Now, this is a company that's not really anywhere in the league of some of the Mag 7 stocks that
No,
we've
not at
talked
all.
about. So why did it stand out so much this earnings season?
There's been a lot of expectations for Roblox to perform the way that it is now. It's taken it some time, but it's really beginning to gain traction. It's starting to show a trajectory where it's going to be able to continue growing at this pace and possibly even accelerate. More importantly, some of the metrics are starting to show that the user base is growing up and expanding. So it's not just a platform for kids anymore. The kids that got hooked on it are growing up and becoming older. They're doing like older teenager things and young adult things with the platform, and that's just a really great sign for long-term growth. In addition, the company is forecasting profitability within the next 4 or 6 quarters, I think, and that's also great news for investors and the stock price outlook.
Yeah, absolutely. Let's talk about what analysts are saying about Roblox right now and just how high this stock could potentially go in the future. What has the stock price done already, too?
Roblox stock price has been moving higher since the report. It's pushing its way to multi-year highs right now, and it's being led higher by analysts. Right now, the consensus estimate is lagging the price action, but the revision trend is very strong, leading to the high-end range, and it's forecasting about a 25% upside. That would be a multi-year high for this stock, and it would open the door for a much larger movement.
Well, let's talk about some future growth potential for Roblox. What are we seeing as far as users go for this platform, and what could the growth potential be?
The user metrics were pretty strong in the last quarter. You have daily active users up 26%, monthly unique players up 30%, engagement up 30%, and bookings up 31%. To me, those are all leading figures that suggest that revenue will accelerate as the year progresses.
Well, wrapping up the conversation on these 5 companies that really stood out as totally winning this earnings season, I think there's some commonalities to look at here. One is kind of entertainment. You've got Roblox, you've got Netflix, even Facebook and Meta in some ways are in the entertainment venue. But then you've also got this heavy tech wins too. What are your thoughts on these sectors doing so well?
I think that it's got a lot to do with tech, a lot to do with AI and the application of AI, but also with consumer spending, with Meta, with Roblox, with Netflix. That's all based on the consumer. But I think what it's saying is that technology is going to win this year. AI is still winning. AI spending is still strong. That is foreshadowing strong results for NVIDIA, I think. And I think that we should expect to see a pretty solid report from them as well.
We will stick with that report as it comes out too. Thomas, thank you so much for breaking down the 5 big winners this earnings season. Let us know what you think. Are there some missing from this list? Some companies that you thought did really, really well? Maybe some others that you thought really flopped this earnings season and was more of a surprise? We'd love to hear your thoughts on the comments. Thanks for watching, everyone. And as always, happy investing.